Hi Bob, hi Ruth. So hopefully the sound is coming through loud and clear. Okay, so just check, yeah. Sound good. Okay, so let's move on. Everybody's happy with the sound, yes? Okay, sounds good. Okay, that's all I need. Okay, so just a question from today. Okay, I'm just going to go and put on the pound Aussie because the question was related to pound Aussie. So I'll just bring up the M5 pound Aussie. Okay, it's just taking a little while to load up. So, okay, so we have the pound Aussie up and going. I'll just refresh it and move up and down time frame to make sure that I've got it. Yep. So now over here, pound Aussie did push down a few times. Okay. So wherever I find ourselves, and I'm just going to mark a spot there. Okay. Now I've marked this spot, and it's pretty much after confirmed blue, red vertical lines. Yeah, and we can see that price still very heavily wanting to go down. Now the thing is, if we got multiple red lines, vertical red lines, we go to the first confirmed one. Okay, the first confirmed one is this second one, yeah? Because the very first one is the Graham window forwards green, yeah? So the confirmed one is here. Okay. One of the additional benefits of how to draw your trade management lines in step 3. Okay, so we'll place a horizontal line at the open price of the confirmed vertical line that we're trade managing. Okay, so really the next confirmed one there is really still the same movement from the confirmed one. Yep. Okay, so we need a point of reference, and closest vertical line to the current high diamond, okay, which is the one that we've marked out. Okay, so step 3 is 20 pips. Our current high is there. 20 pips is just on that riverbank, yeah. So 20. So we can go. We've got an open percentage line here. So I'll just make it easy for myself. I'll just put it there. The other ones that we do is where the vertical line crosses the opposite riverbank, which is the pink. We do one at the red channel line, the channel line that's price is going towards. Yep, you can see it appearing. Okay, now we can go and do our 1-for-1s. Okay, so 20 pips is pretty much in that green open percentage line. Okay, and our 2-for-1, 40 pips is there. Our 3-for-1, 60 pips. That's 62 pips. So 3-for-1 is relatively close to this percentage line, and our 4-for-1, 80 pips, is just below there. Okay. Let me just quickly make sure. So, okay, I didn't do one there. Yeah. Okay, so and the reason I've drawn it, even though they're very close to those open percentage lines, is that amazingly enough, when you put your trade management lines on that vertical line, that the trade management lines you draw are very much on lines, some sort of line support and resistance that's been drawn by the template. Yeah. So when we have that, it's not a coincidence, is it? So $80, 100 pips down here, and 120 pips is just above where price is now. Okay, so these all trade management lines done there. So the thing is, if price wants to go down at a point that you've come here, now for this, generally you'll find that you'll have a pink center line and you'll have pink shade in 3 and 4. But on top of that, what you'll find is that your higher time frames would be very supportive of that. Okay, and that's why we have the multi-chart. So if there's momentum, price still wants to push down, it needs to go somewhere. And that's where our trade management lines that we've drawn from a confirmed vertical line and our other lines, even our river banks on the 15, if it's pushing down, can allow us to get prices of where price would like to get to. Okay, so let me just change this all to pound Aussie so that at least, okay, there we are. Okay. That's it. Okay, so from the 5-minute, we can look up and we can see that downward movement. Not only the movement of the candles being red and going down, we can see blue cross below the white, orange is above river center line. Yep. Okay. And our 1 hour and our 15-minute. Okay, so it's different from when we just got one time frame we could open up and we're trying to make a trade look like a trade and we're trying to justify going further down. So we don't justify because the information that's required to say that it actually wants to go down, it's actually on your chart. And if it's on one chart, you should be able to see it on other charts. Yep. So our open percentage, as you can see, are on all the charts. Same with our Pete's support and resistance. Okay, those bands that you see, the green and the crimson. Okay, so now in these parts where price is already pushed down on that same candle nearly to the riverbank, to the opposite riverbank, we can't. If we jump in right there, what's going to happen? As soon as we jump in, we find price moves back or pulls back, and in pound Aussie, it's 10, 15, 20, 25 pips. So it's nearly moved back significantly, causing a great drawdown. So that's why we don't actually jump in when price of the candle is already at the opposite riverbank. We wait until it pulls back, okay? Because the price still wants to keep going down, it'll pull back up to go down. And that gives us our opportunity to re-enter without immediately going into a 10 or 15 pip drawdown. Okay, by the time you're at spread, that's the 20 pip in the negative. That means you'll be looking at your pips and it'll say 15, 20 pips. If you look at the dollar equivalent, it'll cause panic in your mind. And have I done the right thing, etc. So to save the problems of this feeling and emotion that's going to go and stick in your mind and then paralyze you for future trades, when you go, if on that candle, and sometimes you get a red vertical line on the candle, and prices of that candle is already 20 pips and nearly hit the opposite riverbank, you see it moving down and you instantly just want to jump in because you don't want to miss out. And then you see it goes back up 15, 20 pips, and that stage is nearing your stop loss. You don't want to go and hit your stop loss, so you close it early, only to see straight after you close it, it actually goes down to where you want. So one of the rules is, if it's a diamond or it's hit that riverbank or it's close to it, we don't enter. Okay, we expect that it has momentum and still wants to go down, there will be some sort of pullback because it will react to the riverbank. And in a lot of cases, they'll give you this continuation where it moves back 2 or 3 candles and come back down. Okay, so you may notice that quite conveniently, window 5 actually will help identify or visually give you a clue the price is retraced and wants to come back down. Come back down. Okay, so that little path from that histogram that went below, and then that's already 28 pips, less the spread, etc. So that's a 20 pip trade, So if price wants to go down, it'll do what a continuation pattern. It'll hit a significant support or resistance and bounce back. The riverbank will provide that resistance. Okay, so when it goes there, we don't jump in, and the reason why is because even if it wants to go down further, it'll generally have a pullback and allowing the template to actually guide you through it, you'll find that you'll be in a better mind space, emotional space, and the result you want will be achieved with less stress and consistency. Now, one of the other things you may or may not have noticed is that where price action, say in a higher time frame, like the 30 and the 1 hour, okay, when it actually window 5 and a downward movement has done a pullback, okay, you might get an alert saying there's a retracement on M30. That means it's some sort of movement. Now, whether you have the blue line or not, the blue line just helps guide, because here the blue's gone below the white. It's a cross. It's a significant cross. Yeah. Now at that point, we had momentum. I think the 30-minute will rarely just have one candle going up and down in the spike. Yeah. Okay. So overall, because it's got using anywhere from between 5 to 30 candles that it reviews to go and give momentum, generally will have a run. So once it's actually committed and you've got commitment like this, where the 30 minutes showing strong momentum down and definitely not up, and it's coming from there, you can actually expect at this point where the blues cross below and you've got the window 5 as a confirmation, the price is actually indeed probably going downwards. How much? Well, if you don't have a confirmed line, you have to open percentages, the port bands it wants to go to. But what we can expect is our 15-minute to be actually saying the same information. Okay, so we look at window 5. Yeah, it's all pink. And you generally will find if window 5 is pink, most of the time window 3 will be. Yeah. And price is in a good place and our greedy line's gone outside. And at the same time, and you can see this very clearly on a multi-chart, but because these crosses don't repaint, we can actually put a line and actually see that the main parts of it wouldn't have been repainted. Yes, window 4 may have been green there and repainted, but things like window 3, window 5, W5, generally would have been there. Our blue line crossing below white would have been there. Okay. So you can see at this point that on the 30-minute, it really wanted to go down for at least a few candles. A few candles, every 3 or 4 30-minute candles means it's 2 hours. 2 hours means that you've got 24 5-minute candles. So you'd expect the majority of the 24 candles in the 5 minutes would be red and going downwards. Yeah, and this is what we see. Yeah. So the 30 minutes going down, then virtually every time price pulls up to go back to center or go above the center line, we've got a re-entry. Okay. Now, if we've got a re-entry, that means price still has a place further down, a price that it wants to get to. Okay, so those horizontal lines that I drew on our trade management lines, that's where that comes in handy, because if those lines, trade management lines, land close to or on these additional lines, it means that there's a very positive attraction for price to go towards it. Yeah, because price wants to get would like to go there. Okay, so because if it didn't have momentum, what would we want to? What would we see? We'd see a dotted yellow. We'd see the river basically horizontal. Yeah, not angled downwards. Yeah, so there's certain things that says it's not going down. There's certain things that certainly is quite forceful in what it's saying. Okay, so you're probably thinking and seeing for yourself that if you do have points on your 1R where we've already got pink shading in window 3 and window 5 has got the yellow histogram signifying that it's going below, followed by pink histograms, which also means that if we looked up that our blue line in window 1 would most likely be have crossed below white and possibly below orange, and the orange line being above. Yeah, those sort of crosses will go at least 1 or 2 candles. 1 hour each, 1 hour candles are worth 12 5-minute candles. Okay, so if we start to get pink shading there, we would definitely have a movement down here in window 5. Okay, so now you can use window 5, window 3, window match, and price being in the sell zone and M30 and H1 is a very strong guide for your M5 and M15 that the direction is downwards. And we have direction downwards, and we've got strong confirmation from other multi-charts. Then we're really just looking for destination. Okay, we're not always going to have vertical lines being drawn in every time frame. Okay, here we do have it on the M5, and it gives us an opportunity to draw lines and show a jumping diamond. And if we've got momentum on other time frames, that confirms that there's a jumping diamond environment in M5. So I see that there might be a question there. Percentage line explanation. Okay, let's get to the percentage line. Okay, open percentage is the line that's being drawn that has some significance. Okay, the reason I call it open percentage is only because the indicator itself is called that. Okay, so let me just get rid of some of these lines. Okay. Okay, so the two indicators that draw significant support and resistance band. One is called the Pete's HPF HPFC indicator. Okay, so both of these indicators work on the high-low close of the Friday. Okay, so basically it's like those two indicators do a daily report, takes the high-low close of Friday, and then based on its formula, which we'll use to pivot. Okay, so that means a high-low close. That means there's 3 prices. It adds it up together and divides it by 3, and the line it gets is a pivot. Okay, so that's how it draws that. Now the open percentage also uses the same, but it has a different formula for working out the levels. Yeah, so it does its Fibonacci. Once it gets to 0 point, you can see from 0 to 100, and 100 being that it's okay. So you can see 0, 100, and 200. So virtually it goes up 100 of the Fibonacci, 100 below, and then it does the 23.6 level on that. So that's how, once again, it uses Fibonacci, and it uses the balance points, which it shows as triple or quadruple 0. Okay, so there's significant levels, and that's why we find the price will move that. Now these two, all these lines that are drawn by those two indicators are based on the high-low close of the previous day. Okay, so when you do our 8-hour report, we just take 8 hours of candles session, and we draw our own report lines. Okay, so now these lines being drawn by the system means that the lines will have some significance. Okay, so let me just get rid of this Fibonacci because okay. Mm-hmm. Okay. All right. So when I mean open percentage, I mean the lines which are very report-like, similar results as us doing different report lines. Okay, so as you can see here, prices reacted that, and it's come down to them, move down. So even going down, it respects these lines drawn by the open percentage indicator. It also respects the support and resistance bands and the balance line. Okay, so if we want to make profitable trades, we just got to want what the market wants. So these lines that are drawn by the indicators is saying if price wants to go down, it wants to reach the next level, and the information is dispersed and displayed by the indicator as such. How we know direction is some of the other indicators on the template that allow us. So once we have direction, then the rest of the information like the channel lines, the river, help us, especially if they land on top of these lines that are generated by other indicators, but they all lead back to the same information. And when we have the same information by multiple indicators, then it's really highlighting that price price's destination. Okay, so does that cover the question you're asking, Bob? Okay, so once again over here, yeah, we've got okay. So the two most important things we need when we're trading is what direction's price going, where's price now? Oh well, first of all, what direction does price want to go to? Is that a place where I can see where it wants to go to? And I expect the chart to be able to show me. Okay, so if we've got those, and we've got the chart also giving us indications for entry. So like when price goes in the sell zone, okay, now you can see probably why I do put the blue line there. It just gives you something, so in case we don't notice that price in the sell zone and we're trying to work out, okay, is it going to turn here? And when it's crossed, this means there's some sort of commitment here. So generally with significant averages, when they cross, they have a lot of times a significant information that we can act on. Okay, so here we've got a cross. Okay, it's crossing. But really, it's not until after when the new candle opens that we can actually see it crossed. Yeah. And you can see down here, we've got window 5 confirm something via a different equation that's processing data to confirm what we can see in window 1. Yeah. So we get an alert that we want on the candle after the yellow histogram below 0. And when we come and investigate the noise or the alert, we see, oh, previous candle crossed below the white, crossed below the orange, pink center line, everything else is pink. Okay, where it wants to go. Okay, pivot, open percentage line, river bank. We've got a smorgasbord of targets. Okay, so we're coming close to the end. Once again, time seems to accelerate while we have these webinars, but hopefully that just gives you some insight as to some of the ways that the multi-chart template can actually assist you. You know, if you just want to go by, you know, when 3 higher time frames or 2 higher time frames have significant crosses, okay. Usually when that happens, prices in the, if it's a sell in the sell zone, etc., and you'll see window 3 will generally be pink. Then at that time onwards, you may want to go and pay a lot of attention for entry opportunities in a smaller time frame, because they will be forthcoming. Okay, and this allows you to trade a 5-minute within a 1 hour or a 30. Okay, and if you come any time, even a couple of candles in, you've got a direction, and the most profitable trade will be in the same direction as what the higher time frame says. So virtually, if we came in today, you know, around 11 after 10, after the big movement upwards, we'd have had a fair amount of indication of the price. The most profitable trades to take were sell trades, and then there was a lot of momentum, a lot of pink center lines, and that greedy line outside. Okay, so yeah, best time to go and do it is if you're remembering this webinar tonight and you see it in your charts tomorrow or the next day, and you think, oh, this is trade, and this is some things I remember that were said, but I'm not quite sure. Take a screenshot, post it, I'll answer it. Okay, then you'll have it in digital answer that you can refer back to. Okay, I can do it from my iPhone and Android and give you an answer even if I'm not for a computer, as long as you give me a multi-chart screen where I can see the information from multiple time frames. Okay, so have a great week and thank you for your time, and I'll have this up on the website and ready for you to go and watch again if there's any good information that you would like to go and pause and revisit and watch again. Okay, thank you guys, and spring is nearly here. Take care. Bye. Thank you all.